Take it across to Pankaj Murarka, who's joining us now to talk to us about the pharma sector. Pankaj, your reading of the earnings so far of the pharma sector, and what's the best stock to play at this point of time in pharma?
No, hi, good afternoon. I think we are yet to see numbers from some of the other companies like Sun Pharma, but so far what we have seen in terms of numbers, they are pretty healthy in that sense. One trend that's clearly coming out is we are seeing troughing out of pricing pressure in the US market. US market is the largest market for all global pharma companies and especially for Indian pharma companies. And last 2 years, 2.5 years, there have been a significant pricing pressure in the US market, which have been impacting companies adversely. And as a result, sector as a whole has been having negative earnings growth actually for the last 2 years. I think now we've reached a stage where prices in US have started stabilizing, and that's becoming more and more evident from commentaries that companies are giving and what we are seeing, especially on a Q-on-Q basis or on a quarter-on-quarter basis, we are seeing stability in prices. More importantly, we think that probably we've reached a stage where earnings in the sector as a whole has stopped out because the sector has been a big underperformer over the last 2 years. And from this year onwards, the new financial year onwards, the sector will start delivering healthy growth. So I think the sector overall looks pretty well poised in that sense. Within the sector, we've been traditional holders of Sun Pharma, so we continue to like that given the diversified nature of their business. But apart from that, we've also started turning positive on Lupin after their last results. And we always liked contract research as a space. So we like some of those companies like Syngene where they have ownership.
Let's get back to our discussion with Pankaj Murarka. Pankaj, wanted your take regarding the stock of L&T as well. Fundamentally speaking, everybody seems to be quite positive about the capex cycle, and L&T is supposed to be the best way to play it. But today there are no buyers for the counter.
Well, initially the stock had run up before the results, so it had a pretty decent or healthy run up in stock price over the last 4 or 5 weeks. And there was some bit of disappointment on their margins on the business last quarter, and I think that's more a short-term issue where they got impacted because of rising commodity costs. But probably we should see margins reverting back in this financial year or the next financial year. So in that sense, I think the medium-term outlook for L&T continues to remain strong, as you rightly said. Given the uptick in investment cycle, L&T is a classic play on infrastructure investments across the whole segments, be it roads or airports or urban transport, mobility, and or oil and gas and hydrogen and so on and so forth. So I think overall medium-term outlook for L&T continues to remain strong. For investors having a view which is 1 year and plus, I think it still makes a reasonable investment case.
Take as far as the valuations of our listed world is concerned, are the new age tech companies?
Well, just to put things in context, when these companies got IPO'd, there was a lot of euphoria and frenzy around these companies. And I've said this earlier. I believe that these IPOs were mispriced in that sense, and which is why these stocks have had a significant downtick in prices post their listing on the bourses. But having said that, I think one thing which has clearly happened is these companies have made rapid pivots to the business models because capital markets want profit-making businesses who can deliver growth and, more importantly, give cash back to shareholders in terms of dividends or stock buyback. So these companies have made rapid pivots to their business models where these companies, some of these companies have already started making generating cash flows, like PayTm. And there are some others which will start generating positive free cash flow in that sense. So I think valuations in that space as such have moderated significantly from where they were 18 months back, be it the listed space. And for that matter, I think similar markdowns have happened in the unlisted space as well. And now we find at least certain stocks or some stocks in the space are more reasonably priced, though we still think that there are certain stocks which are still expensive in that sense. And probably we're looking at more attractive prices or reasonable prices as better entry points in some of those names. But otherwise, I would think valuations have moderated significantly and have become attractive at least for some names in the space.
Right. Balrampur Chini numbers as well on your screens right now, and optically they look like good numbers, nothing short of what was expected. But Since you are talking right now, Pankaj, that their valuations definitely have moderated, and that's for everyone to see. Where is it that you've added positions or bought afresh into any of these names?
PayTm, we think they've started generating free cash flow now, and we think they can have a very strong growth curve over the next 3 to 5 years because now, if you look at the whole payment space, it's a clearly oligopoly between three players, which is Paytm, Google Pay, and Phone Pay. And the fact is that digital payments are growing at 40-50% CAGR, and they will continue to grow given India's growth dynamics. And now Paytm has started making money out of their core business, which is payments business, apart from the other financial services business. So that's one we own. We also own, we have owned for a long time, and we've added to our positions in our core holding, which is InfoEdge, which is essentially the Naukri and the other verticals business, and also principal shareholder in Zomato and Policy Bazaar. So we think valuations there have moderated over the last 18 months in line with the space, and it looks pretty attractive to us in that sense. So we've added to our positions on InfoEdge as well.
On Asian Paints, there was this worry about new entrants in the market, whether it was Grasim, JSW, or even JK Group for that matter. Do you think Asian Paints will continue to maintain the lead when it comes to the paint segment?
Well, undoubtedly, they'll continue to remain a leader, but a leader can still lose some market share. Having said that, it's a very well entrenched player, and it's a phenomenal company with very strong brand distribution. And I think they'll continue to dominate the space. There's no denying the fact. Having said that, as more players enter the market, I think one, they can help expand the market or grow the market faster because penetration is, there is still quite a room for penetration in tier 3 and tier 4 towns and villages in India. And some of these companies can take away some market share from Asian Paints. But having said that, they'll continue to remain a dominant player in the industry. I don't think so there's any doubt about that.
Asian Paints is the question. Pankaj, will you still be a buyer in Asian Paints?
Well, while it's a great company, but we still believe that valuations in the entire paint space, for that matter, are extremely expensive in context of the growth that the sector is going to deliver over the next 3 to 5 years. So we actually have a somewhat negative view on the paint sector as a whole, and that's primarily more because of valuations more than anything else. So we'll stay away from the stock because of expensive valuations.
Okay, Pankaj, always good to chat with you. Thanks for taking the time out. We were just